It's been apparent for some time now that what happens in Europe has a knock-on effect in the US and vice versa. As the financial crisis deepens across the Eurozone, for instance, you can be sure a day, week or month won't go by without some mention of Europe on Wall Street. The question is, if you're an investor, where can you find a safe haven amongst all this turmoil? If the euro is under increasing pressure, for instance, there's a tendency to buy up large quantities of US dollars as the next best option. But what about alternatives? Are there any? In today's interview, I've got Felix Adam from ACT Currency Partner in Zurich on the line to talk to me about opportunities in Scandinavian currencies. Hi, Felix. Felix, let's get straight to the point. There just isn't enough liquidity or volatility in Scandinavian currencies to attract a wider variety of traders, is there?
I mean, the question, as an investor, okay, liquidity is important for somebody who's trading in and out or has big size currency volume to trade, because that is important. I don't think for somebody who has a portfolio and wants to invest in Scandinavian currencies, the liquidity has that major issue. Otherwise, if you want to do it for a longer term investment, and there is not that much volatility. I mean, you know how it is. If you look at the major currency pairs like euro and dollars, they are not moving at the moment. It seems like market is somehow, I would think, in a modus where nobody knows what's going to really happen, because what is happening in the market fundamentally we never had before in the past, so nobody knows what it really wants to do. And of course the side currencies are affected by that as well, and that explains the lacking of volatility and missing of liquidity. This is something which is very normal. These are not major currency pairs.
But as an alternative to, say, the US dollar, what are the realistic opportunities for someone trading or investing in, say, the Norwegian kroner?
I mean, the reason is, the question is always what you want to do with currencies. As I said several times in the conferences, the currency has a few jobs to do. First of all, the currencies are made for making payments. That's the euro and dollar. These are the major currencies where you can do it best globally, if you look globally. Second is for measure prices. This is also euro and dollar are very, currencies which are established, and everybody knows if you tell that's the value in euro and that's the value in dollar. If you start talking about this is the value in Swedish krona, NOK, is nobody understands you what you're talking about. It's like speaking another language. But now, if you talk about keeping values, and if you talk about portfolios of private individuals to keep value or diversification, then you find people to have lots of problems to go away from their original currency pairs. Let's say for Swiss people, they normally stick to the Swiss franc and they don't go to currencies abroad because they don't have any feeling, or understanding for it. And it's the same for the American people. If you look, Americans, they are 95% of their holdings. Even if they're saving money, they're all in dollars. They do not care if the dollar is collapsing or not. And this is a phenomenon which we have all over the world. There are very few people who are going abroad to invest in currencies and diversify different currency pairs. But I think it is quite important for people in dollar, in euro land, because what is happening, or even in sterling, what's happening to these major currency pairs, they have this money printing situation which we had over the past. The keeping value effect is in danger, and I think it would be much more important for investors to move into currency pairs which have a different background. And I would specifically, as you mentioned, the NOK as opportunity to place your money so you have a diversification, because I do believe whenever is something going wrong to the dollar or to the euro, the NOK could be affected or will be affected, but it's definitely not going to be the same. They don't have the same base than the major currency pairs has, and I think that's the reason why you should move into these pairs. And that means liquidity is not that big issue and volatility is not that big issue. It's just to save protection on your wealth.
The now retired American billionaire hedge fund manager Julian Robertson, whose company Tiger Management Corporation is often accredited as being one of the earliest hedge funds, said he loves Scandinavian currencies and stocks. Do you echo Mr. Robertson's words, and do you think traders and investors alike should be more excited about such alternative currencies, to say that of the US dollar or euro?
I think in general, I do agree to what he says. I mean, we do have, as I said before, the dollar and the euro is in danger for keeping value long term. In my life, and I'm since 35 years in the financial market, I have never had a situation where it was that unclear or unsure or unsafe as it is now. You should take action because of that. So it does not make sense to put all the eggs in the same box.
Thanks very much for joining us, Felix. Some interesting points there on the Scandinavian currencies as an alternative investment. Don't forget to bookmark Dukascopy TV so you can keep up to date with the latest information and interviews. For now though, goodbye.